Morning, Checkmate. Evening for you.
It is. G'day, Pete. How you doing?
Good, buddy. How are you?
Yeah, very well. Enjoying the green candles, and what green candles they are.
Yeah, didn't you have a $33 green candle in your gold allocation?
Oh, no, it was down $4.50. I mean, it was just beautiful, right? I mean, you've got Bitcoin. I woke up and it's in Aussie dollars. It was up 6,800, and gold was down $4.50. I thought, I mean, I'm glad I own gold because I have to hedge this upside. Poor shit.
Bro, when are you gonna convert that gold to Bitcoin?
Yeah, well, I'll tell you what, it could be soon, but I did do that trade actually back in 2020, and it would have been around like August or September or something. And I had a bunch of gold, and I had it for years. And I remember driving down the freeway, and I must have been listening to a Michael Saylor or one of these podcasts. I was just balled up at the end of it, and I was like, you know what, I'm going to do it. It's going to sell it. Got home, sold the gold, wait the 3 days for the money to actually transfer to your account, and then buy the Bitcoin. I think it was like 10K. And, it's one of those great trades that makes sense.
Danny, how many times do you reckon over the years I've thought, you know what, I need some gold?
You've said it a lot, but you've never managed to do it.
I've never done it. Each time I'm like, fuck it, more Bitcoin.
I mean, it never plays out the way you want. I mean, look, it's going to run eventually. And I know the moment that I finally commit to actually selling it, it'll just teleport to 3K. But, again, Bitcoin's destroying it in every metric.
Sounds like Peter Schiff for a moment.
Yeah, poor bugger. I do wonder. I mean, I think he's like fully on board. I think he's a Bitcoiner. I can't see how you can continue to rattle off the critiques he does without just having a laugh every time you hit send.
No, it's pure cope.
Has to be. No, you reckon?
Pure cope. Pure cope.
That poor bugger.
Because if he's bought Bitcoin while saying all this stuff, he's a scammer.
Yeah. There's not really too many good interpretations for him, is there?
Did you see that guy who moved his IRA away from Peter Schiff into like a Bitcoin allocation?
Yeah, it was a couple of years back, wasn't it? It was much cheaper than where it currently is, 2013 or something.
The dude's crushed it.
Yeah, absolutely.
Do you see that one, Danny?
No, I've not seen that.
Yeah, it's worth digging out, man.
Well, I mean, the amazing thing is that, like, when you look at it from the data perspective, on every metric, no matter how much the TradFi guys want to massage the numbers, no matter which metric you pick, it's just killing everything, right? In terms of store of value. Actually, I've got a good story about a store of value. I finally got my old man to actually buy Bitcoin back in 2020. It wasn't 3K, it wasn't 6K, it wasn't 8K. It was on like the 15th time that I said, you have to buy this thing. But anyway, long story, they've been retired for 4 years. And he actually came to me the other day and he said, look, I've held this thing for 4 years. When we moved house, like they retired, they left the family home. When I bought a new property, when you consider all the moving costs, the stamp duty, the taxes, and 4 years of living expenses, he said my net worth has gone break even from when we retired. So he's held it for 4 years, and he's quite literally got 4 years of retirement back, which is exactly what Bitcoin's there for.
Absolutely love that.
It's great, isn't it?
I had a guy call me yesterday. I told Danny about this. My friend of mine, a guy DJs at my bar. He phones me up yesterday. He's like, yo, Pete, so I need to ask you about crypto. I was like, all right. He's like, yeah, so I bought some Bitcoin previously, sold it, and I also still have all my altcoin bags. And he said they were like 90% down, and now I'm back at about break even. He's like, what should I do? Should I like sell it now? I've done okay. Yeah, and then wait for a dip. And I was like, well, firstly, you should get rid of them because they're shit coins. Secondly, I was like, what dip are you waiting for? Are you waiting for the dip where it goes from 100K to 80 or 120K to 100? I was like, which dip are you waiting for? But I think the bigger point is I think there's a lot of people now who are just getting their head back above water.
Yeah, it's a really good topic because, some of the models that we look at tries to actually find where that exact middle is, and some of the work that I did with Dave Puel last year, I think we actually found like the middle cost basis, the real cost basis for everyone. So here's a question for you guys: if you were to just like eyeball in, what do you reckon the middle price of the whole last cycle was? What would you put like the smack center line at?
38K.
When you say middle line, what is it? You're not talking from like bottom to top.
So take when
based on buyers.
Yeah. So start in 2021, right? Late 2020. We rallied up to the first peak where we had Coinbase. We had that big nasty sell off when China banned all the miners. Then we went to a second all time high. Then we had the whole FTX. So that whole sequence, the middle, Danny, you call it 38.
I've got it about. What? It's 38.
No, I called 38. We should have a
Call it
bet on
38.
who's closer.
I'm looking at the chart like 46.
Yeah, so around 30. If you draw a line at 30 or 32, it's going to slice. It'll be the bottom of that first sell-off that we had, the really nasty one. Yep. And then FTX kind of came, but we had the whole sell-off below. That line, there's one of the charts we'll look at later on, but this model we found is smack in the middle. And that is, in fact, at about 32K. That is the average cost basis for everyone who's active. And that discounts all the lost coins, the Satoshi coins. It's only considering active investors. And if you just draw a horizontal line, and if you go back to 2017, that middle line was like 8K. Like if you take a 1 year moving average, it's like 8,000. And that's exactly where this level is. And this is why when a lot of people are like, oh, look, Bitcoin's down 90%. It's like, well, only if you lump summed your net worth at the top and didn't do anything else. But that's just not how people operate, right? People who do that panic sell out 6 days later. So the real average is somewhere around the middle, and that's actually where we see most people's cost basis is.
So we're kind of double the average at the moment.
Exactly. And this is actually a key point, right? Because as you go higher, people's mood changes, and you need to get a certain level of high before, you actually get, you feel that wealth effect. When you're below it, the hodlers are just stacking. When you're a bit above it, you're still quite keen to stack, but there's probably a level, 2x above, where you're like, oh, it feels expensive. Even though it's not expensive, it feels expensive.
Bro, I said this on this call yesterday to this guy because he was like, it feels a bit expensive at 66K. And I said this to Danny. I was like, I've bought Bitcoin. The first Bitcoin I bought was 80 pounds back in like 2013 or something. And I bought again when we were like 600 and then 1,000 and then, all the way through, I've been buying Bitcoin. There's never been a single time where, this Bitcoin's cheap.
Yep.
Not a single time.
I mean, it's $100,000 over here, right down under. We got $100,000 Bitcoin right now.
Yeah, well, that's with the Australian peso.
The Pacific peso. It is weird. Like, I mean, $100,000 is a meaningful. But actually, there was a tweet some time back. I can't remember who put it out there, but it was a good one. And it was basically saying that you have to realize that like Bitcoin wasn't 80 pounds, right? It was 25 grand, 20 grand, depending on your currency. That's a meaningful amount of money for a lot of people. And the difference with this cycle is that the people who bought, and if you acquire a full Bitcoin, that's a meaningful amount of work. You have to work your ass off to get that for most people. So we're not talking about people who've like stuck $200 in and done extraordinarily well. We're talking about people who have really invested serious money. And there's almost like a level of respect for that level of savings. I think that's a different factor this cycle.
Listen, I was reading about some guy on Reddit. He's talking about his goals to get like 1 Bitcoin, and he was talking about he's kind of got to half a Bitcoin. Actually, you've seen a few of them, or some people celebrating on Reddit anonymously, like, I finally reached 1 Bitcoin. They've worked so hard to get there. I think it's incredible. I mean, I love it. It's
absolutely.
It kind of proves that that savings thesis, and now hopefully those people are just going to see upside from this. But it's been a really interesting ride. I thought we were going to all-time high yesterday. I think we got within like $400.
We closed at an all-time high. So on a closing basis, it was an all-time high, but we didn't take out like the wick, which, I mean, you can debate what that means, but, by my account, it was an all-time high.
Well, so the wick's around, $69,080-ish, depending on where you are. I think we need 70. People will claim it on Twitter at about like 69,200, I reckon.
I think so. That's probably about right.
69,420.
Pete actually said that he wasn't going to go to sleep until all-time high, so
I haven't slept
down there.
My eyes.
Nice one.
I haven't slept. I've been up all night waiting, just refreshing. Another interesting thing that's been happening, I think, recently is that we've been hitting all-time highs in different countries.
Mm-hmm.
Yes.
And every country we've hit all-time high before the USD just proves we've been debased against them. Like the British pound was yesterday.
100%. I've actually noticed myself that when you look at either Bitcoin or gold or whatever asset, because they're the kind of assets that trade in every currency, right? I'm not looking at the S&P 500 in AUD. but I am looking at Bitcoin and gold in Australian dollars because it's an international currency for many regards. And you do notice those effects. Like the more time you spend looking at this stuff, and particularly me, I'm spend all the time studying data and markets and what's going on. I remember when I first got into this industry, and you're trying to do ratios to understand like what's like fractions with shit coins and Bitcoin. You can't get your head around it. It's the first time you've done like live fire currency conversion, but now you can see it, and you can actually get a feel for. Hang on a second, we're not at all time high in that currency, but we are in mine. That just shows that the AUD's gone down versus the US dollar.
Yeah, exactly. I mean, we had the British pound. I think the pound and the euro all-time high yesterday.
Yes.
We also had a market cap all-time high as well, right?
Yes, it's over silver actually. So it's number 7, I think, in the world in terms of global assets. So poor old silver's having another bad day.
Interestingly, though, I've only had a small handful of the phone calls or the texts from people saying, yeah, like 2 or 3. I think we have to get over the all-time high and get the mainstream media just going crazy about it. I actually think it might even be once it goes over 100K, because I think that 100K data point is just huge. It's like this huge marker. I mean, I remember back in 2017 when we went over $1,000. I remember that clearly, and I know we'd been over it before, and I think we wicked over in. Didn't we go 1,200 previous cycle?
Yeah, 2013.
Then I remember 10,000. Now I think 100,000 like USD. I think that's going to be a big day, and I think that's when the phone calls will be. The only difference this time is I think a lot of people are going to go, "Well, I just can't afford it this time."
Yes. No, I think there's a few layers to that, right? I think a lot of people, if you go to the retail side, I think people underestimate how damaging the 2022 down cycle was, because it if you buy a shit coin and it goes down 90%, 99%, it's painful. If you buy anything or Bitcoin and it goes to 0 because some guy's a scammer, that's a real painful, that's a 0. That's return of capital, not return on capital. So I think people got really, really burnt in that cycle. So I think that's definitely a component that keeps retail away. But I think the unit bias is definitely part of it. And I think that for Bitcoin, it's going to really be about the passive flows now. I want to have exposure. It's X% of my portfolio. I don't really care what the number is. I'm buying a $45 ETF. All I really care about is give me that 1% allocation. I think that's going to be where a lot of this comes from now.
Well, it's a process of re-education now in helping people understand that unit bias, understand it's about gains percentage-wise, not price. I could also see some of the exchanges flipping to start just pricing in sats.
I think so. Yeah, no, I've always wondered that just as like a product developer, you'd be wise to at least have the option and just see how people respond to it, right? Let people toggle between the two and see if you get different effects.
Yeah. All right, man. Well, listen, look, I know you got some charts for us. Looking forward to this. Do you want to run through it?
Yeah, no, I mean, we started talking about the shrimp. I can't remember if it was like slide 2 or 3, Danny, but there's one with shrimp balance, which I think is actually a pretty nice place to start.
Well, but before we get into this, like we're clearly covering on-chain data. There are different opinions on the on-chain data. Some people's like it's like voodoo. Some people like it's nonsense. Some people think it's good. Like, how much can we rely on on-chain data?
That's a great question. The truth is, it depends who's interpreting it, right? Like TA, how many TA charts do you scroll past, and you never go back and be like, hang on a second, this guy was dead wrong. Like anything, it's the quality of the analyst behind it that makes all the difference. At the end of the day, what is on-chain data? And the lens that I come at it from is I mean, it's not unique, but it's certainly something that I've tried to pioneer and push forward, is it's all about psychology, right? Bitcoin is, and we all know this, it's a very organic creature. It captures something that no other, I mean, even when you look at the price chart, there's just something very organic about it. Everything comes in twos. You get like 2 pumps or 2 rounded tops or 2 triangles in 2017, 19. There's just something about it that's quite structural. And my lens over the top is because it's the most hated and loved and feared and revered asset ever, right? It just riles people up on both sides. You get a very human response. And my lens is that it's essentially human psychology, right? What is price? Price is fear and greed coupled with a bit of leverage and capital plotted against time. On-chain data is just all of that information baked into the Bitcoin ledger. Every decision you make, every transaction you send, look, there's people who will say that all the trading happens on exchanges. I did some calculations the other day. On any particular day, between 30 and 60% of the spot trading volume is occurring in inflows and outflows to exchanges by deposits and withdrawals, like billions of dollars a day. And particularly the inflows, every single one of those transactions has a fingerprint. Did it come from a guy who's held it for 2 years? Is he locking in big profits? Is he bailing out in a fat loss? And when you aggregate all this stuff together, there can be error bars around the individual, but in aggregate, it actually tells you what humans are doing. And one of my favorite charts, because I get this question a lot, talking to institutional clients, they're coming from a traditional finance world. They're trying to get their head around why they should be looking at or considering on-chain. And when you plot one of the metrics that I love to use, which is called SOPA, it's how much profit or loss people are locking in. It's the exact same chart as funding rate. So you're measuring the leverage and the amount of directional leverages in futures markets, and it looks exactly the same as the amount of profit or loss that people are locking in spot. And what that's telling you, when you've got lots of guys locking in big profits, some other guys paying a huge funding rate and going levered long at the top. So they're telling you the same story, and there's so many of these analogs where different data points tell you the same thing. So look, in my experience, I think it's reliable, but it does depend who's hands it in, because it's nuanced, it's new. There's lots of jargon. There's lots of headlines where like people read the title of the metric and they don't actually understand what it's doing. They're like, oh, cool, this says it's whales. It's like, yeah, but you've got to understand what that actually means when you talk about whales.
So do you think in some ways Bitcoin is almost like the perfect free market, and
yes,
the data's telling you it's like a replay of human psychology?
Yes, and the metric I was talking about before, that pricing model that's dead in the middle, which Dave and I, we spent a lot of time working through it at a like very fundamental level, like by the way it's constructed and measured. And we didn't know this was the case. We just kind of discovered it. I would put it in the bucket of a discovery rather than an invention. It's constructed to be the cost basis, but then we ran a very long-term, what is the average value and what is the median value as price oscillates around it. It was 1 and 1. Now, in a statistical sense, that means it's literally dead center on the average basis, and it's also dead center when you look at like how many observations there are. So it is very organic, and these things that come from first principles then appear to actually be in the middle. And I reckon, if gold and the S&P and all this had block level data, you could see what was going on every 10 minutes and you just aggregate it. I guarantee you'd see all this stuff the same, because it's why price charts in the 1920s look exactly the same as now.
One of the things I've always been interested in as well is that with these markets replaying the same every kind of cycle, is that you do have a bunch of people who maybe have completed their first cycle, maybe in their second, even their third. And if you're in your second and your third, you've got that interesting kind of compound growth. Like if by your second cycle, say you had 1 million in Bitcoin, and then the next cycle you had like 5 million, you're starting to see like meaningful amounts of money and thinking about things you could do with that. Maybe you buy your parents a house or a car or have a holiday. And so you have to release some of that capital to do those interesting things that you just could not do before. And if the cycles are replaying the same, there's enough new buyers coming in the market to soak up the outflow of capital from those people.
Absolutely. And I think that's what this cycle is going to be really interesting for, right? Lots of folks are saying, oh, look, these ETFs are going to take coins off chain, so therefore the data is going to degrade. And it's like, well, how many analysts, when they're analyzing the global economy, only look at money moving around on one system, right? If money's moving around the ETFs, you study the ETFs. If money starts moving into Lightning, then you add that layer on Lightning. With exchanges, do you filter them out? Do you keep them in? This is the value of this stuff. It's like, how do you work out what matters? And these ETFs, they're going to bring all sorts of new dynamics like rebalancing, quarterly performance. There'll be all this seasonality that will come into it. But we're already we're only talking about single-digit percentage of the coin supply. So whilst it's very meaningful right now, it's because it's coming from zero, right? We're going from zero to a couple of billion. Once it's at 50 billion, which is the size of gold. And I saw a chart the other day. I think we're actually 50% of the gold ETFs already, which is pretty brutal. But once we get to these meaningful size, the ETFs will kind of hit a saturation-ish kind of level where it starts having more of the rebalancing flows. You can't have $500 million every day forever. Maybe you can. We'll find out. But it's one of these interesting dynamics where we're going to see how market structure shifts as a result. but it depends. It may cap out at 5, 6, 7% of all supply, and that's not really enough to kind of move the needle in some ways. We'll find out.
How analogous do you think Bitcoin is to gold in that kind of transition we have had away from analog to digital, whether it's DVDs to Netflix and CDs to MP3s and Kodak cameras to digital cameras? Do you feel it's very similar? Do you think people are buying Bitcoin for pretty much the same reason as gold?
I think so.
And because of that, do you think Bitcoin is now eating up the gold part of the gold market? Do you think gold is losing buyers into the Bitcoin market?
I think so. I think that's very meaningful, right? And I often say to people who are kind of studying and learning on chain, can you see yourself in the data? Because if you don't know what the read is, take your own like hodler bias and see whether you can see it in the data. What I've found in my time looking at Bitcoin on chain is it trades like a commodity. It very much trades like a commodity. It has these like beautiful supply and demand balance points. Bottoms look exactly the same. Tops look exactly the same. And again, this is not saying that they're going to be the same in the future. Things will change. But thus far, it's been like textbook, absolutely textbook. So in that way, the human behavior patterns that are inside that data is just the same. It's consistent every time. So it definitely trades very commodity-like. I think people have learnt a lot. I think the last 5 years, 6 years of Bitcoin education has been meaningful, right? We talked about this last time I was on. We've got that chart showing the shrimp buying the bottom rather than the top. That's meaningful, and I think that's a very, very real impact, real change. And it kind of you can see yourself, right? I can see myself and my own learning journey. Even just when you look at when you were actually buying coins, I was buying a hell of a lot more in 2019, 2020 than I was in 2017 and 2018 because I just didn't understand it enough to commit to it. So I'm certainly buying it over gold. In the vast majority of instances. And, I think it's the same trade, right? I think, and particularly if you talk about the older generation, they're not really that interested in capital growth so much as capital preservation. And sure, gold is preserving it, but it's getting killed by inflation, right? Whereas Bitcoin is offsetting and appreciating while being the exact same trade. And I think at some point, if you measure it through Sharpe ratio, Sortino ratio, any TradFi metric, Bitcoin is just wiping the floor with everything. And, at some point, these guys just can't massage the numbers to make it wrong.
Which makes me wonder why Danny is bullish. Danny has been way more bullish this cycle than I have been. And I have been bullish. I'm catching him up, I think. But I'm still surprised we haven't seen kind of even more buyers in the market. I'm surprised we haven't seen more people following the Saylor textbook. It's literally out there. I'm surprised we haven't seen more people looking at maybe the El Salvador playbook. And maybe it's coming. Maybe it's coming because the people are kind of realizing there are nation states now looking at El Salvador and going, holy shit, Bukele was right. And maybe there's companies looking at Saylor and going, shit, he was right. He figured out the cheat code. Maybe it's coming. But my expectations is like there is a rocket ship coming.
Yeah, and I think there's two areas that I think are going to be quite meaningful. Well, actually, probably three. One, I think the nation state thing has probably got some legs. I actually think the nation state argument, if you're Saudi Arabia or one of these guys who's looking at this, the whole Russian reserves thing, you've got to be looking at this and just going, I just have to move out of treasuries for something. And Bitcoin makes a hell of a lot of sense in that instance. So I think the nation state sovereign wealth fund is a key area. I think we're going to start seeing the very, very ultra high net worths starting to understand it. You could probably lump in there like the retirees and baby boomers who are like, they want to dabble with 1%. There'll be stuff like that. But I also just think that the middle class, I think your thesis of the middle class being the primary area, to me, that makes a lot of sense, right? How many people are going to finally get their parents to just stick 1%, 2% in and just let it do its thing? As I said at the start, like my old man has offset 4 years and he's held it for 4 years. So it did exactly its job. And more and more people, they just ping me and say, hey, I heard this happen, this went all right with your old man. What are your thoughts? Should I buy now? It's like, the question always comes, but, I think they're getting closer to understanding that it's not dead and it's not dead and it just won't bloody die. And then eventually you just have to put some in.
I remember when I was talking to Max Hillerbrand, he was talking about being on a Bitcoin standard, just like going all in. And I was like, yeah, but it's a bit risky. It's like, look, every bull market all you ever do is regret all the money you didn't put in Bitcoin. You just do. And I look back. I remember going back to it. I have like this little like disaster scenario where I've got like 10K of British cash hidden in a location. If shit hits the fan, I can get to that 10K. I mean, that was about 1 Bitcoin when I did it.
Yeah, it's
now
painful.
It's not only has it been debased over those 2-3 years, whatever it's been, it could have been worth a lot more.
Yep. No, it is. It's a painful process, and I think the other thing that I've been looking at recently, which I find quite interesting, there's the saying in traditional finance with the stock market that it takes the stairs up and the elevator down. Right? You see the stock market just kind of grind higher over years, then just goes vertical down. Volatility spikes. They step in, they fix it, and then away it goes. Bitcoin's the opposite. It takes the stairs sideways and down most of the time, and then it just elevators up. And if you're not there for that elevator, it's like stiff shit. And you just don't know when this thing's going to go, because when it goes, it doesn't take any prisoners.
Have you got this is for you and Danny, have you got a price where you're like, I'm definitely going to sell something if it hits that?
For me, once it gets into the 250 range, USD, once you factor out taxes, it's now getting to, Australia's got a ridiculous housing market. I'm not one of the fortunate folks who has a property. That's the first time where I can trade a scarce asset for another scarce asset and it be a meaningful sum, right? I mean, if you sell something, you get 50 grand profit, you're like, okay, great. That's like going to change my next year, maybe year and a half. If you can get something in the order of 6 figures, now you're talking about a deposit. Now you're talking about something quite meaningful. And even then, it's going to be like, I mean, the gold's gone long before that point happens, right? So the deposit gets funded with the shitcoin first before the Bitcoin gets touched.
Dude, I bought a house 2 years ago, and I sold a bit of Bitcoin to pay the deposit. If Bitcoin hits 250K, I could have bought that house outright.
Yeah. And look, I think the important thing is, look, numbers will probably get big, right? Because from a fundamental perspective, if we assume it's going to eat gold, even getting to 50% of gold, you're talking about 250K, right? More. So, I think 600,000 USD is the same as the gold market cap, which, Bitcoin's 10x better than gold. So, I mean, yeah, it's got 6,000 years of history, but, the clock's ticking. And, I think that when you've got that kind of meaningful sum, you can trade it for life. You can trade it for like a house, for something that like improves your life. And I think it's important that Bitcoiners do that, because, otherwise what's it for, right? What else would you use your savings for? If it's a savings technology, spend it on things you'd spend your savings on. That is an important part of this whole process.
You got a number, Danny?
Not really, but mainly because I don't know what I want to buy. Like I think what Checkmate said is spot on. Like if it got to a price where I was like, fuck, this could do so much for me and my family, then yeah, I would sell something. But I've not got a target, because I'm always wrong as well. Like last bull market, I was convinced we were going way above 100K. So like I missed that by a long way. And I assume the same thing will happen this time. So until there's something that I really want to buy, look, I'm just happy.
Yeah, no, I'd echo that. It's about what are you going to, like, that's the thing. My old man's like, hey, should I sell some? Because he actually held it at 90K last time Australian, which is the all-time high. And he gave me shit the whole way down. Never mind the fact that he wrote it up unbelievable sums, but he gave me shit the whole way down. And when it got back, he's like, oh, should I sell? I'm like, and buy what? Like, and buy what? And he goes, that's the problem. Like,
Dad, that's just my inheritance.
Put it in a term deposit. Yeah.
Danny, you were willing to go public on your thesis? You told me this morning.
Which one was that? Oh, the people that I think are going to be big in this. It's complete speculation, but
yeah. But you know what, Danny? In fairness, you secretly have some pretty good calls here or there.
Well, that's some pressure. But I reckon a big. I think the narrative just works so well. I think a big person in this coming cycle will end up being Mark Zuckerberg, and everyone will simp for him, even though he essentially just creates loads of surveillance tools. It seems so antithetical to Bitcoin, but I just think he's going to be, because I was trying to think of who is mega wealthy and has almost dictatorial control over a company. And I know like their board structure will be way more complicated than MicroStrategy, but he is still the dictator of Facebook or Meta or whatever.
So you think Facebook, not Zuckerberg, or both?
I think both. But again, it's based on absolutely nothing. I'm just trying.
I think it's a smart call though, because I think Facebook has some potential long-term even medium term issues. I know a lot of people are moving away from the platform. I know they're struggling with engagement. User acquisition is down.
Yeah.
I think it's a smart call.
Well, I mean, they went down the path of Libra, right? So they've already had like the tendrils into, digital money. They've had that initial idea. So I mean, I can see it. I think it's feasible.
I just like the narrative that Bitcoiners like to simp for Bukele, who's, for all the good he may have done, is essentially a dictator. I just think the guy who peddles the surveillance technology will be the next person we all simp for.
It is funny watching those different cycles, isn't it? The main characters of the story.
Yep.
Well, there is one every cycle.
Yeah.
If Michael Saylor owns it for 2 cycles, fair play to him.
Did you see the announcement today that he's?
It was another 600 million, right? Can't stop,
Wild.
won't stop. But I mean, it's interesting because look at the stock price, right? You can give him shit all you want, but it was trading at like what, $60 for like 20
Forever.
years. Yeah, forever. And now it's, the funny thing is you've got that really ugly looking wick at the start of his price chart, which is like the IPO or whatever it is. And then he might actually take out that level, right? Normally these are just ridiculous wicks that should have never happened. If he takes that out, that's something else.
And that was in like 99.com bubble, right?
Yeah.
There was a really good tweet somebody put out yesterday, probably today for you guys. But when Michael Saylor did his first big buy, it was like 250 million, and he got something like 30,000 Bitcoin or something along those lines, or 28,000 Bitcoin. That same level of buy will get you like 3,500 now.
Mm.
Yeah. Yeah, no, it's big, but I mean, he's essentially he's brilliant in the way he does it. He's arbitraging the Bitcoin to share price, essentially. And if he can buy more Bitcoin by selling those shares to then add more BTC per share, that's essentially what he's doing. And this thing just becomes a spiral because he's buying the asset that goes up. At some point, I was thinking about this today, there has to come a point where he has to liquidate some to clear some of these debts. Because I haven't done the numbers. Someone else can probably do it, but I don't know if their like income is enough to pay off these $1 billion loans. So at some point, you take 50% of the Bitcoin off and you pay off the whole loan. You're up 2x, right? That kind of. I think there has to be a sale at some point to clear the debt.
Can he borrow USD against them to pay them off?
Yeah, I mean he could do. I mean that's yeah. Who knows?
Is that just
right?
leverage on leverage then, though?
Well, not really. I think it's moving the debt.
It's moving the debt. Yeah, it's moving.
It's moving the debt and delaying the time, knowing that Bitcoin will continue to appreciate in value.
Yeah, and I mean he's got a few different avenues, right? At the moment, he's doing the share sales, so he's selling shares to arbitrage the price. He's also got convertible notes, right? So these people are going to they're going to give the debt and get the equity on the other side. There's all sorts of different mechanics. I mean, the interesting thing what he's doing is it's the most insane level of financial engineering that I think the world's ever seen. Like he is arbitraging his balance sheet in a way no one has done before. I mean, not to my understanding.
Well, I think he realized like everything eventually is going to be repriced in Bitcoin. And so he's getting in early. He's getting in while the sats are cheap to reprice everything in Bitcoin from his balance sheet. What I don't understand is a good question I'd want to put to him next time I talk to him is your share price is obviously very high because you own all this Bitcoin. What is the shareholders' claim to that Bitcoin? They have a partial ownership by a share, but the Bitcoin doesn't pay dividends.
Mm.
It's not like they can cash in their shares to be giving Bitcoin back. So whilst it has this amazing kind of like value in their treasury, it doesn't pay dividends.
Well, I mean, it's the same as an ETF because if you buy an ETF, you own a share in the trust and in a strange way. Because it's a good question, right? Why do these things keep their price? It's because market makers keep their price. And, when it comes to MicroStrategy, because it doesn't quite function the same way where there's actually coins coming in and out, you don't have the same kind of market maker dynamic. But it's the same as a lot of things, right? People will trade. At the end of the day, it's worth what people will pay for it. And if someone isn't willing to pay to arbitrage that price higher, someone else will because they see it as free money. And like, this is just kind of how markets work. They almost resolve themselves.
All right. Anyway, listen, we should probably get back to your charts.
No, it's good. I mean, I like reading about this stuff, right? I mean, that's all I do when you've got these charts. It just kind of gives you a talking point, but the conversation's an interesting bit.
Well, look. So for people listening, not watching the YouTube, will we make these charts available to download, Danny?
Yeah, we will do.
Okay, so the chart we're looking at is Bitcoin price performance since cycle all-time high, and you've got like the previous cycles in there. You've got 2013 to 2017 is pretty clear, 2017 to 2021, and then we're looking at like the current cycle 2021 to whatever. Yeah, and you've basically highlighted that the pattern of drop is very similar, and now we're kind of in the kind of early rise in price before the elevator goes up. Are these mapped on a perfect 4-year cycle?
No. So these are literally from the all-time high. And why I actually wanted to show this one is, in particular, you'll see that I've actually, and I've been banging this drum for a long time. I believe the all-time high was April 2021, not November. November was a price all-time high, no question. However, when you look at it, I mean, because what I'm trying to measure here is duration, right? Now, what affects duration? It's going to be sentiment. And bear market sentiment, without question, set in that May sell-off, that first May sell-off when China banned all the miners and we had that 50% drop. Because when we got to that all-time high in November, we didn't have any like massive lower high in transaction counts, massive lower high in transaction volumes. The chain was just orders of magnitude more dead. There wasn't anywhere near as much profit in the system. We had lots and lots of people selling on that exit rally. So the reason I actually peg it at April is that's when sentiment kicked in. So there's lots of people who are saying, hey, this cycle's running too hard, too fast, too quickly, but they're measuring from that November all-time high. But if you actually translate it and say, well, sentiment really peaked in April when Coinbase went to direct listing, that was really the start of the bear. So if you do it from that perspective, everything is exactly where it should be at this point in the cycle, which is kind of wild. But you can see on the blue chart, that's we're in December 2020 at next to where our current black curve is. So we're pretty much at the point where Michael Saylor's stepped in, MicroStrategy's bought their first couple of rounds, we've rallied up to the all-time high, and then it just ripped from there.
But based on time, it feels like we're early. If you mapped against like the traditional time, like Rational Root has got its time chart, the circles. I feel like we're a year early.
Yeah, it's a bit of a distortion, and that second all-time high was a distortion. The other one that's a distortion, actually, it might be on the next chart, actually, Danny. There's one with 2019. Go to the next one. No, we'll come back to it later. But there's 2019 was also, and also 2020. March 2020 was a bit of an aberration. And 2019 was driven by the Plus token Ponzi, which was like 1 or 2% of all Bitcoin getting sucked up in China. And this is the first time that Western traders had derivatives. So they're all shorting, going, nah, 6K can't hold. And there's just this enormous Ponzi scheme just sucking in coins. So there's kind of these like events that shake up the cycle and shake up the system a little bit.
Scams.
Well, there's that. I mean, March 2020, right? That's just like a market event that kind of changed the duration of things. But I mean, this chart here is another good one.
Well, if we map it back, we had Mt. Gox in the 2013 cycle.
Yep.
We had Plus token in 2017.
2019.
And we had, well, it happened in 2019, but in that cycle. And then we've had like BlockFi, Celsius, FTX in the last cycle. I wonder what a cycle would be like without one of these huge, massive scam blow-up sell-offs.
Yeah. No, I agree. And I think when we look at the current market structure and cycle, it's going to be very interesting. I mean, I have no doubt that we're going to have a financial nihilism, shitcoin, altcoin season of the age. I just know this is going to happen. But the money can't move from the ETF outwards. So, Bitcoin is in a very unique position at this point in time where the size of money that we're talking about and that can access these ETFs is just bigger than God, right? It's just enormous. And that money cannot flow down the curve. And I was talking about this with a friend the other day. The money that's going to flow down that risk curve, there's always going to be the VCs and the altcoiners and things, but there's always been this kind of capital rotation where Bitcoiners make a bunch of money, they rotate down the risk curve and blah, blah, blah. And my thought there, and again, it may be completely wrong, there's going to be a lot of Bitcoiners who are like, but I now hold the winning asset. And the validation is there. I mean, in many ways, I think these ETFs are the first sign that, hey, this thing that you've been holding for a long time, that people have been telling you that you're wrong on and you've held through all these drawdowns, it's going to get integrated into the financial system. You're going to be just fine. Why would you sell that winning ticket to go and buy some other shitty ticket, right? So I think there's going to be less Bitcoin capital that rotates down the stack. Plus, you've got that ETF flow, which can't rotate down the stack. In many ways, Bitcoin is very, very unique. And you may end up with kind of Bitcoin and then the most ultimate shitcoins you've ever seen. And that's kind of it, right? You're going to have these two long tails where it's basically the flight to quality and the flight to absolute shit.
The flight to absolute shit.
Show title.
All right.
Yeah.
Right. The flight to absolute shit. Love this.
There's your title.
So this next chart, I like this one.
Yeah, this one here, going back to my previous point, I think sometimes when you visualize stuff, it just gives you a different perspective. And this has been my favorite chart of all last year. What it's basically doing is just isolating the uptrends, right? So I just picked from the cycle bottom, which is obviously easy to tell in hindsight. But we started this chart not too long after FTX and said, well, look, we don't know this is the bottom, but let's just track how this thing goes. And from that point, you then at the top with the area charts, that's basically showing the biggest drawdown from whatever the top is in that uptrend. And I've been saying that this cycle in particular has felt very spot driven. 2021 and 2019, there's a lot of derivatives, a lot of futures, all that stuff. Even though we have much deeper futures and options markets, it's very spot driven this cycle. And you can actually see that the pattern of it is very similar to 16, 17, but the drawdowns have been nothing like it, right? We've had a 20% correction once on a closing basis. There's just been no pullbacks. And I mean, I learned about the no pullback thing in 2019 when it went from like 4K to 14K. And I was just thought, oh shit, I didn't buy enough. It was like the first time I had that feeling of I just didn't buy enough of this thing. And it's clearly just, I mean, it's gone from 15 to 68 with basically no pullbacks, which is just unheard of.
Yeah. I mean, I remember 2017, we did have 2 or 3 30% pullbacks.
Yes.
I remember those quite clearly. I always felt like the really good traders aren't traded regularly. They know when a bull market has ended and they know when one started, and they play those uptrends. And that's always been my gut feeling.
Yeah.
Do you think? Sorry, I'm jumping around a bit here. Do you think a lot of our models could get broken over the next 2 years?
I think it's very possible. And I mean, I've built a lot of models over the last couple of years. What we generally do is, and that's why I try to bring all of it down to psychology. And you say like, okay, how much profit? So MVRV is a good metric, right? It's just measuring how in profit or loss is the overall market. And you can do it by long-term holders, short-term holders, but it's basically an unrealized profit multiple. And the logic is it very rarely gets above 3. And what that's telling you, if it's 3, it means that the average guy is in 200% profit. 200% profit is enough where people start to liquidate their coins. And it may go to 3, it may go to 3.2, but in 2017, great example, it goes to like 4.8, but they'd already sold at 3 and 3 and 3. So it's like if you love 200% profit, you're going to love 300, 400, 500. So there's just this like instinctive level where people go, you know what? I'm going to let some off the table now. So what we try to base a lot of our models in is just very simple statistics, right? Show me when 3 or 4 of these different things, show me when the miners and the hodlers and the long-term holders and the short-term holders, show me when like these 3 or 4 or 5 different things are above 1 or 2 standard deviations. Just show me when there's a whole bunch of things that happen at the top, blow out statistical levels, and if they all line up like a Christmas tree, you're probably looking at something that's pretty close to a top.
Interesting. Okay. All right. Moving on. Supply breakdown.
Yeah, so this one here, I mean, lots of people like to look at the supply
you
side of the equation. You showed
us this one before,
right?
didn't you? You showed us this when I met you in Australia.
Yeah, I think so. Yeah, long-term supply.
There was a chart where there was like this deviation between price and available supply.
Might have been this one. Yeah. But the framework here, right, the blue line is coins have been held longer than 5 months. We use that because statistically speaking, they're the most, once a coin has been held for 5 months, it typically stays that way. But there's 2 exceptions to that rule. One is during bull markets. So you can actually see in the orange boxes, which we've actually entered as of the ETFs going live, old coins come back to life, right? So the higher the price goes, the more profit people are in, and people start to sell, right? So people are asking, where are the coins coming from that people are buying for these ETFs? They're guys who bought it $200, $2,000, $20,000. The people who've held their coins for long enough, and they're like, you know what, this is now changing my life. Back in 2021, on the up leg, we actually saw some very old miner coins come back to life. They were a very significant chunk of the sell side pressure. So at some point, people are like, you know what, this is my price. And it's probably not for their whole stack, but they're taking some off the table. And the other one is that people reach, it's a pain. We've got a whole report on this called Buying High and Selling Low, which is about the people who literally come in for their first cycle. They buy the top, they hold all the way down 80%, and then they sell everything at the bottom. And we see this time and time and time again. But, you know, that's most of us have been there. Most of us have actually gone through this process.
Maximum pain point.
Maximum pain, buying the top, selling the absolute bottom. In fact, we've got some charts at Glassnode where it actually tracks people who buy the top, and you can see where in history they actually sell and whether it was in profit or loss. And some poor guys, they bought like the 2017 top. They held it through all of 2019, all of March 2020. Price rallied back to 20K. They took the L, right? They got out of a small loss, and then price moons to 65. So they held for like 4 years and then still got nothing for it.
Well, that's like the guy who called me. I'm like, hold, man. Convert that shit to Bitcoin and hold it.
Sit tight. It's hard to do. I mean, patience is the hardest thing in markets. Most people can't do it. Sitting tight and doing nothing is the hardest thing to do because your fingers are itching. You want to do something. You're like, but look at the green number. Some people have the discipline to just sit tight, but a lot of people just don't. This is one we were talking about before with talking about education. This is basically looking at how much coins I've got. It's relative to mine supply, not for any reason other than it's like a nice normalizing benchmark. But you can see 2017. This is everyone who has under 100 BTC, which if you kind of go across a couple of cycles, like, you know, a couple of cycles ago, 100 BTC was retail level. Now 1 Bitcoin is retail level. But you can see there was a pretty big buy side going into 2017. But the bottom that FTX put in is, I mean, the buy side was just incredible. They are the sat stackers. They're the little guy who've been listening to podcasts and reading books and learning about Bitcoin over the last 5 years. That's their buy side down at the FTX lows.
This is a great chart.
I love it. It's great.
What are they doing? Is new retail here yet?
No. By my read, and we've got a couple of charts later on, October last year was a pivot point. Everything up to October was hodlers only. It was only the people who survived the bear. From October onwards, there's been new money, measurably new money, and ETFs has obviously just supercharged that. But it's big money. It's not retail. It's big money, and the hodlers just do what they do. They just DCA away. But October was a real turning point. We saw there's a couple of things. A lot of our metrics about capital inflows started really ripping higher. We also had stable coins started to go from net outflow to net inflow. So that's just capital coming back into the space. Futures markets came back to life. There's a whole bunch of things that woke up back in October.
You know what's so interesting is, like, I think everything in our industry is a derivative of Bitcoin. And so you could map our podcast downloads and subscribers onto these charts, and they will be very similar. Like,
same
for
as
example,
YouTube
right
videos
now,
Glassnode, same thing.
Yeah, so like, but your subscribers, because we had pretty much flat subscription levels for up until around, I mean, I'd have to double check, but let's just say till autumn last year. And then we started to see like this gradual inflow of new subscribers, and now we're starting to see it ramp up.
Yeah, we put out the all-time high video that we ever did. I think it got like 60,000 views or something. And we put it out like hot off the press. Actually, you can see on the second all-time high in this chart, where it hits the pink line, the second all-time high, that first big sell-off, it was like in January, I think. We put out a video within like 2 hours of that event happening, and the video just absolutely mooned. I think it was like midnight when we released it, which is US morning. And we're just sitting up all night watching the chart just ripping higher of people viewing this thing. And we just never got anywhere close to that again. That was the start of the bear and the all-time high views, which is just very ironic. And it's been downhill ever since.
Yeah, but we're coming back, man. We're so back.
Since October. October is when things started to ramp back up again.
Yeah, our low of the last, we had an odd February 23, but February is a short month for us, 20, so we lose 3 days. But like if you account for downloads per day, our low was October 23, and we're always a lag. October 23, and we've just been in growth since. I mean, we're what's that? 30% up, 40% up since then.
Well, I think the interesting thing is like when everything's crashing and like FTX is blowing up and Luna and BlockFi and Celsius and all that shit, everyone, even though price is doing terrible, everyone's still interested. It's when things go sideways for a long time that everyone drops off. And like you said, Pete, we definitely a lagging indicator.
Yeah.
Time pain. I mean, not even a lagging indicator because like this chart here, that orange line in the middle, that's the market, the price I was talking about before. We call it the true market mean. That's the one that's dead center. It is the middle of Bitcoin's price, statistically speaking. When we crack above that, that's when the average active investor is now in profit. And that was the turning point. That's when big money started coming back in. That's when your downloads started to tick back up. That's when my downloads started to tick back up. Everything happened in October. And it's actually when we broke above the cost basis. So, again, a lot of this stuff it probably is, how would you describe it? Quite often on-chain data will map exactly onto like some guys like, oh, look, my Fibonacci level at this point. It's like it also happens to be like an on-chain cost base. It's because it's driven by human behavior, right? And so at the end of the day, it's all psychology. So all this shit is telling you the same story. It's just plotted in a different way. Yeah, here it is. This is the one I was talking about before with the plus token. But yeah, the concept of these, so these 4 charts, this is the second one, is just how I think about market cycles. Because we can use different models, but all these are based in some kind of rigorous backtesting and things. The blue box is what we call capitulation. This is the bottom of the bottom, and it's when it trades below what's called the realized price, and that is the average cost basis for every coin. Full stop. It includes Satoshi, early miners, all that kind of stuff. So my take from here in terms of models being broken, we've broken below the realized price in every cycle. I think that the realized price may not get visited again because it's actually for want of a better term, it's too conservative. I actually don't think we should have really spent much time below it last cycle, but FTX was like a hyperextension event, which was, kind of driven by this exogenous force. My take is that we may not come back to the realized price, but that yellow box there, this is what I call the uncertain recovery. And it feels like that. It's like PTSD from the bear is still strong. Things are kind of slow. Doesn't quite. And this is when we're oscillating and testing that true market mean. We're still below it. Another fun fact about the true market mean, Bitcoin has spent 50% of its life above it, 50% below it. So when people are asking me, is the bear market dead? It's like, well, are we above or below that line? Because we did our 50% due date. Now, in theory, statistically speaking, we should spend 50% of our time above it.
Interesting. Uncertain recovery. I love that.
Yeah. And then, this you can see here, this is the enthusiastic bull. So when did the bull market start? Well, it was on the 12th of November, right? When the bottom got set.
What's your definition of bull market? Because I'm told a bull market is all-time high.
Yeah, I think it's a great question. So, for example, the bull market, to me, as an analyst, the bull market for 2021 started in December 2018 in that blue box.
Okay.
That bottom tick is when the bull market started because we never set a macro lower low from that point onwards. But then you could say, well, the whole thing's been a bull market, right? So it's all a bit of a test. But
so it's bear to bottom, then bull to top.
I think well, not necessarily. To me, it's when the sentiment dies. So that's why I like to look at the on-chain side because it's like, show me when the investors are telling me it's a bear market. Show me when the investors are like, I'm done. I hate this thing. I'm out. And that's why May 2021 was that level because that's when it just killed sentiment completely. But you can actually see here when we get above that true market mean, it teleports to the next level. And that red line up the top there, that's one of those +1 standard deviation bands. So it's not anything, there's no overly scientific things here. It's just very simple statistics. That red line is when the average guy is they got a lot of paper gains. And when people have got a lot of statistically large paper gains, people start to sell. And we saw that long-term holder supply before. We've tagged that line, and long-term holders are starting to sell. So it's this like textbook behavior pattern that we see time and time again. But yes, essentially we are on the border. We are sitting as we speak. It's at the all-time high, which is also the previous all-time high in the previous cycle, and then again back here in 2017. And again, I haven't massaged these numbers. This is just the way that I kind of think about it after spending enough time with this stuff. The next phase is euphoria, right? And that's where you can't pick where the top is going to be, but the market just explodes through all these levels.
Do you think we were robbed of a proper euphoria last cycle because of Luna, FTX, and everything? There was just too much selling.
I think there's two components. I think, and actually I credit Lynn because I think she was the first one that said this, is that we went up too far too fast in the first leg of 2021, and that was heavily driven by GBTC. I mean, this thing vacuumed up 650,000 Bitcoin in like 4 months, which is insane. So I think GBTC, the moment it went to a discount, everything just started to unwind. And then all the hidden leverage and people who that trade was a widow maker. And we're only just unwinding it as we speak. The other one that's I put out a chart on this on Twitter the other day. When you plot Bitcoin's on-chain transaction volume, just unfiltered, and you plot FTX's exchange balance, they're the same chart. Because FTX was churning so much coin, whether via arbitrage, lots of it was going in and out of Binance. So there's lots of coins moving between FTX, Binance, on-chain volumes were massive. And then the moment that FTX blows up, Bitcoin transaction volume falls off a cliff, and we still haven't even come close to recovering it. When you look at it from Glassnode's perspective, we do our adjustment, and we say, well, that's all the same entity churning coins rather than like real economic value. We filter all that stuff out. But when you look at just the raw, unfiltered data, FTX, and it all happened on the second peak.
Yeah.
Suddenly, on-chain transaction just churning.
So it's pretty interesting then that we're seeing these big rises in price while GBTC is still unwinding. What is it? Is it a third?
Like a 600 million outflow the other day and price stayed flat. That's why that drawdown chart is amazing, because it's telling you there is a buy side under there. That's why we can't have a 20% correction. There's been just insane buy side below.
But is it a third of their coins have now cycled out?
200,000, I think, of the 600 and whatever they had.
That's pretty insane.
I think they took in something like 32,000. I think it's 32,000 in fees between 2021 and when they converted to an ETF. So I'm pretty sure it was something just absolutely insane. 2% on 655 by 2.5 years. Happy days.
Yeah. So have you mapped the euphoric phase onto that chart to see where you think it could go?
Yeah, no. So essentially that red curve there, that would be the level where you hit it. There are, that's +1 standard deviation. We will regularly get to 2 and 3 standard deviation levels. So you can model that out and actually put, what is the level where the incentive is so strong? And what I try to encourage people with on-chain data, that red curve is based off the unrealized profit and loss, the paper gains held by the average guy. You can then layer on, are they actually selling? So you can look at, are they in a statistically meaningful large amount of profit? And are they taking a statistically large amount of profit? When both of those things light up, and the miners are usually in a lot of profit, and you kind of put these 4 or 5 different components, you're like, all right, these are all flaming hot, probably getting close.
So have you got like a lower and upper bound that you think we will be in for this next cycle?
Yes, except the delta here is that, as you can see, the red line moves. And that's because, so this is actually a really important point. For people who want to understand on-chain data, the realized cap is the bee's knees. It is the centerpiece backbone metric. Absolutely so important to get your head around. It's the on-chain market cap. Essentially, rather than valuing every coin in the supply at the current price, you value every coin when it last moved. So Satoshi's coins, he's got 1 million of them, but they're worth 0. So we don't count them until they're spent. So it's kind of this like natural liquidity adjusting factor. But now think about this. If you buy 2 Bitcoin at 10 grand, right, that's $20,000 invested. If you have not moved those coins, it will be saved at that $20,000 invested in Bitcoin. It's like the amount that you've saved in it. If you then spend those 2 Bitcoin at 40 grand, right, you've made a 4x profit. Someone's got to come in with that $60,000 delta to actually buy those coins off you. That's a capital inflow. So when the realized cap is climbing, that's a capital inflow. So you can actually see here where that red price line is climbing during the bull, that's doing two things. Inflowing demand is coming in and absorbing coins, but the guys who bought their coins much cheaper are selling into that as well. So you've got this supply and demand meeting in the middle. So it revalues higher. So the more demand you have coming in, the more capital inflow you have, but the more likely you are getting to the top because eventually it's going to oversaturate. So you can project, but it's also a moving target.
So once it starts to go sideways, you kind of know you're done.
Correct, because that means the capital inflows have slowed down and people who bought the top are now panic selling in a loss, and that's a capital outflow, which causes the realized cap to go sideways or down.
But Checkmate, I think Pete is asking for a price prediction.
No, what I'm actually asking is you just to drop me a text and say, yeah, Pete, we're done.
Well, I mean, the whole idea is we got a whole bunch of charts that are designed to, like with those standard deviation models I was saying before, we got charts that describe this, right? So the idea is just to look for these moments where there's a bunch of stuff overheated. So it's not about price. It's about what are the conditions you want to see at the top.
So what you're saying is, Pete, subscribe to Glassnode.
We have the data, man. That's what we do.
All right.
This one here, sorry, I think that one's a good one to pick on. This is exchange inflows and outflows. Just to highlight, in October, you can see this is like in the lead up to the ETFs. This is inflow and outflow volume going into exchanges. We're talking about $2.5 to $3.5 billion in both directions every day.
Jesus.
This is why on-chain data is full of information, because every single one of those coins is carrying a signature of who held it, how long do they hold it for, how much profit are they in, what are they locking in.
With the ETFs and the fact that the coins are being custodied in quite a centralizing way, is that impacting some of your data? Is that making your job a bit more difficult? Or is it just new data?
Yeah, a little bit. So for example, that long-term holder supply that we saw decreasing before, about 57% of that is GBTC. So, what we can do is essentially filter that out and say, well, once we've come to a conclusion and said, hey, look, exchanges are doing this and they're not really relevant. We don't care about internal transfers by Binance. We can filter that out. So we can look at all of our on-chain metrics, excluding exchanges, excluding ETFs. You can look at it only including ETFs. So you can kind of break it down. We call this cohorts. And you're going to break down which segment, which cross-section of the market do you want to look at, and what metric of that cross-section do you want to study. This one here, I was talking about capital inflows before. This is just a 30-day change in the realized cap. So show me how much capital is flowing in over the last month. And actually, I think this one's really cool because I've got Bitcoin in orange, Ethereum in blue, green is stable coins. And you can you can visualize capital rotation. Money comes into Bitcoin first, then it spikes down to Ethereum, and then stable coins are the quote pair for every shitcoin on centralized and decentralized exchanges. This is the capital waterfall in motion. You can actually see money flowing into Bitcoin and then cycling down into all the other assets. And yeah, I think the last thing that stood out to me last year was this is futures and options open interest. This is Binance and CME futures. CME has overtaken Binance as the primary trading venue by some margin now. So I mean,
wow.
When we talk about who is here, these guys are here. These guys are here.
The pros are here.
The pros are here. We're talking about money that's. I mean, yeah. If you're talking about price targets, that's why I'll go and say, well, it's going to consume gold. So there's 600,000. That's where I'll base my price targets on, because fundamentals make sense to just overtake gold. And when you see stuff like this just supports the thesis, right? You have big money, big traders, people who know what they're doing. It's probably going to dampen volatility. It's probably going to be, if you're a retail trader, these guys are probably better than you, and they're here to take your money. So I think it's important to remember that Wall Street is there to take your money, and they're bloody good at
it. There's another show title for you there, Danny. Wall Street's here to take your money.
That's a good one. I know we've got to your last chart, but you've got to give us a price prediction. We need a quote.
All right, only if we all do it.
All right.
Yeah, look, I think we crack 250K. I would be very surprised if we don't crack 250K this cycle. I do think that the last cycle was truncated because of GBTC. I think we went up too far, too fast. The structure I'm seeing in this uptrend is very, very robust. The buy side that happened under 30K, and actually I think this is probably a good closing point for me. The hodlers pulled back this slingshot, right? The ETFs just let it fly because the coins got soaked up in 2023 before these guys showed up. This is just that marginal bid looking for those coins, which is why your price goes up so quickly. But the hodlers did all the work below that. And as a result, we've got a very, very strong holder base, and we're just not yet seeing them sell. And I think after the pain of 2022, I know for me, I'm not selling at 60K. No way. I need a much higher price for the pain you put me through, Mr. World, in 2022.
You said we'll crack 250, but that's not your prediction. How about this? 100K sats each, closest to the top. Switch
the
up
actual top?
Yeah, the actual top. We have to have a caveat in that because if the cycle breaks, then there might not be a top. We might not know what the top is. Let's say by the end of 2025.
There'll be a
long-term bet.
There'll be a top.
All right. You in on the bet, Checkmate?
Yeah, why not?
Danny, you in?
Of course. We've got plenty of bets. We'll just add another one.
I'm just going to put my finger in the air, right?
And guess one.
Because when does the top and the bottom start? Because
do you know what you should do? You should write it down, because otherwise, if someone goes first, you might just pick like 1K above.
Okay, yeah, fair.
So the highest point in before the end of 2025.
Okay. I've said mine before on the pod.
I think I know what you're going to go with, Danny.
Well, I've been a bit sneaky with it.
Ooh, so you cut down a bit.
Or have I gone up?
No, you've definitely not gone up.
So it's at the end of 2025.
Before the end of 2025.
Wait, can I just ask Checkmate a question before we do this? Do you think we hit the top before the end of 2025?
It's a good question, right? I mean, I often relate it back to like physics, where you can see the speed of the particle, but you can't see where it is, or you can see where it is and you can't see its speed. It's like price and duration. You can't ever get both. The truth is, and this is, again, while we put the price prediction down, the way I always read this stuff is show me the tape, right? Read it as it comes in, because you can never know, right? But I would think we would probably go through some kind of a bear market correction by that point. I would think that we would have set something in motion by that point.
I'm down below now.
All right, who's going first?
I went 380.
Oh, I didn't see it.
380.
380? You've gone big. I've gone 282.
Danny,
250.
Danny, you bottler.
Well, I said 300 last time, but there's a big psychological level.
You've been saying 500, you lying motherfucker.
Did I say 500?
Yeah, you said that before.
Oh, wow.
Right. We literally have a note with our bets, because me and Dan.
Yeah, I was going to say they've been racking up of late.
Yeah, I'm 200. In fairness, for the amount of bets we've done, I'm 200K sats out. Right. So, Peter, Danny.
The one thing I find, I guess it's annoying, is all the talk of like, oh, you got to hedge the bet. It's like, no, just make the bet and just write it. If you don't want to, if you're going to hedge the bet, don't make the bet.
Yeah. Did you see my bet with Mike Green?
I did. Yeah.
You commented on it. I remember now.
Yeah, hedging bets.
Like he's making out like I'm a fucking idiot because I'm offering a bet where like there's a no lose for him, but he doesn't. I'm guessing he doesn't really have like friends, because me and Danny drink beer and make bets every day.
Yeah.
We bet on who can cross.
He thinks you're taking it more seriously than you are.
Me and Danny will bet on who can cross the road the quickest. We turn up at an Airbnb, a table tennis table. We bet the whole time we're there. We bet on every football match we watch together. I mean, some of the bets are ridiculous.
That's the thing. Like, he wants to make it a financial derivative and all this stuff. So, mate, just make the bet. Like,
by hedging, he's already the loser.
So I think on that bet, I think he's trying to prove that he's smarter than me and understanding how to trade the market, and I'm just trying to prove he's a dick.
Yeah, and if he's got to hedge, he's got to buy Bitcoin anyway. So
yeah, I love that.
It's a win-win.
All righty, man. Well, listen, look, where do you want to send anyone?
So check out our YouTube channel at Glassnode, and our insights portal, insights.glassnode.com. My team, I started in February 2021 at Glassnode. My job was to find out what these metrics did. And I've spent the last, 3 and a bit years learning how to do it. So it's, and strangely enough, actually, we wrote the first week on chain that I ever wrote, which is our newsletter, flagship newsletter, was week 7, 2021. And we wrote week 7 the other day, and it was the exact same price.
Huh.
So, I've done the full round trip through the bear market, and here we are.
You've worked on it for 3 years and nothing's changed.
That's it.
Are your bosses sending you to Bedford next month?
Oh, for cheat code?
Yeah.
Yeah, I'll have to twist their arm.
Yeah, just say, look, Pete keeps putting us on the show. It's good for us.
Yeah, happy days.
All right, look, mate, good to see you. If we don't see you next month, we will see you later in the year. We'll be in Australia for sure. And,
yes.
It'll be good to catch up. Always enjoy talking to you. Good to see you, man. Danny, love you, bro.
Good on you, fellas.
See you guys.
Cheers, guys.